The newest report just came out of Warren Buffett's Berkshire Hathaway about their most recent moves in the stock market, which tells us which stocks they sold off and which ones they bought. This one is pretty interesting, as we have seen from previous quarters that Buffett was a net seller of a stock, with the most shocking one where he reduced his Apple stake by a massive 50% and held a record high cash position of $277 billion. And in this video it gets even crazier. We are going to talk about Buffett's latest 13F report, which shows the equity holdings from management investors with over $100 million in assets under management, AUM for short, and see if we can learn anything from this. The first major takeaway from the previous report was the massive cash position, and with that came the big question: does Warren Buffett know something that we don't? With that, we know that the cash position grew from $277 billion to $325 billion in this quarter, an increase of 17.32%. This reminds me of the famous quote, "Be fearful when others are greedy, and be greedy when others are fearful." Maybe Warren Buffett is just waiting for the right time to strike, seeing all these stocks hitting their all-time highs. This increase in cash can be simply explained by looking at the latest activities, which brings us to the second key takeaway. Warren Buffett is a net seller in the third quarter of 2024. We can see that exactly 25% of the stake in Apple has been sold, selling exactly 100 million shares, bringing the total stake to holding 300 million shares exactly. This is quite interesting, as looking at the price history of Apple, it seems that the stock knows only one way, and that is going up. The big sell-off doesn't change the fact that Apple is still the largest holding, sitting at 26.24% of the entire portfolio. Also, we can see that Buffett has been selling Apple stocks for 4 consecutive quarters. Buffett has sold a total of 616 million shares of Apple, and in earlier quarters, Buffett's answer for selling is basically due to building a cash position and tax reasons. You would expect for investors to get scared by the massive sell-off, but quite the opposite. Apple is at an absolute all-time high. When we look deeper into the portfolio, we can see that the number of stocks held is 40, with a portfolio value of $266 billion. For reference, last quarter, the number of stocks held was 41, with a portfolio value of close to $280 billion. The next takeaway is that the top 10 holdings make up close to 90% of the entire portfolio, while the top 5 make up close to 71% of the portfolio. The top 10 holdings include Apple at 26.24%, American Express at 15.44%, Bank of America with 11.88%, followed by Coca-Cola, Chevron, Occidental Petroleum, Moody's, Kraft Heinz, Chubb, and DaVita Healthcare. The top 12 each have a position of more than 1% of the entire portfolio, and 9 out of the top 10 holdings pay out dividends. Notice how in the top 10 only reducers are included and no major additions to already existing positions. Let's go over to the activity tab to see what Buffett has been up to this quarter. Right away we notice the newly bought positions and sold positions. First off, 1.2 million shares of Domino's Pizza and 404,000 shares of Pool Corporation were added to the portfolio. For the eliminated positions, Liberty Series C and A were sold off for respectively 60 million and 35 million shares, and Florida and Decor for close to 4 million shares. I want to take a look at the financials of 2 companies. Let's start off with Domino's Pizza. Domino's is a dividend paying company with a pretty low starting dividend yield of 1.36%. But that shouldn't scare dividend investors away, because look at the growth in dividends. This went from $1 in 2014 all the way up to $4.84 in 2023. This makes both the 10 and 5-year CAGRs 17%. And as of 2024, the dividend payout is $6.04. dividends are paid out of free cash flow, and we can see that the dividends are easily sustainable and supported by this. The 10-year free cash flow CAGR is almost 20%. The payout ratio is 35%, meaning there's plenty left over for the business to do other things like reinvest back into the business and buy back shares. And about this last one, Domino's has been doing a pretty good job of going from 57 million shares to 35 million shares in just 10 years. Taking a quick look at the profitability breakdown, there's a lot of growth all over the board. Revenue has a 10-year CAGR of 8.43%. EPS, earnings per share, has really shot up over the past decade. Even net income, this has a 12.28% growth CAGR. The balance sheet breakdown shows us that the ROA, return on assets, is absolutely phenomenal, being around the 30% all decade long. All this shows that Domino's is a growing machine. The second company I want to take a look at is Apple. With so many sell-offs from Warren Buffett over the year, I want to see if we can find out why Buffett has his doubts about the company. There's something about the numbers that I would like to point out that causes some concerns for investors. Take a look here at the earnings and revenue per share. We can see that this just keeps on growing and growing. The issue that many have is the lack of growth in revenue. And how is that? If we see these numbers rising year after year. Well, take a look at the revenue per year. We can see this is lacking over the past years and even declining from $394 billion in 2022 to $383 billion in 2023. Then how come that the revenue per share keeps on growing? Well, this is due because of the fact that Apple buys back millions and millions and sometimes even billions of shares per year. This makes it so that the revenue and earnings per share are manipulated to look like revenue and earnings are increasing every year, but that's not the case. Even Apple themselves have reported that iPhone sales are slumping due to weakening global demand. So that is something to think about before buying Apple. Lastly, take a look at which sectors Buffett is heavily invested in and summarize this whole report. The top buys are Domino's Pizza, Pool Corporation and Heiko Corporation. The top sells are Bank of America, both Liberty Series, Floor & Decor, and to top it all off, Apple. Despite the huge sell-off, Apple is still Buffett's largest holding. The top 4 biggest sectors Warren Buffett is invested in are information technology, of which 50% of the portfolio consists of thanks to Apple. The second is financials, in which 21% of the portfolio consists of thanks to American Express, Bank of America and Visa. Third is consumer staples with 11.8% thanks to companies like Kraft Heinz and Coca-Cola. And fourth is energy with 10.1%. Although Warren Buffett is known as a buy and hold forever investor, we can see here that the average hold period of a stock is 23.28 quarters, which is about 5.5 years. So that is it for the analysis of the latest update of Warren Buffett's portfolio. Go ahead and comment down below what you think of all the moves Buffett has recently made and let me know what your favorite stock is. Thanks for watching and make sure to subscribe to not miss the next video. And make sure to subscribe if you like this type of content.